प्रेजेंटेड बाय ईबिक्स कैश। हर खुशी के लिए काफी है।
Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the headlines tonight. Markets end marginally lower amid choppy trade. Nifty ends just above 17,200. Metals drag pharma gains. Major relief for those with health insurance. Supreme Court says insurer cannot deny claims if the pre-existing medical condition was disclosed in the proposal form. Bajaj Auto announces 300 crore rupee investment in its EV plan, starts work on its new 5 lakh unit capacity EV facility in Pune, rollout in June. Apple puts supply of Foxconn's India plant on notice after protests, finds accommodation and food in dorms for employees is not up to its standards. Omicron scare grips the Indian economy just as it was showing signs of recovery. Special report on what the impact will be in the Jan to March quarter. Markets started the day on a volatile note, swinging between gains and losses. The volatile session ending flat, however. Sensex closing 91 points lower to shut shop just a touch above 57,800. Nifty trading in a narrow band through the day, closing the session marginally lower at 17,213. Among sectors, healthcare remained the top performer. Auto shares too saw some bit of buying interest. Pharma stocks like Divi's Labs and Sun Pharma gained over 2%. Eicher and Bajaj Auto also logged in gains. These were offset by losses in financial and metal stocks. Top losers today: SBI, ITC, Coal India, NTPC and Grasim. A listless day of trading for broader markets as well. In a significant order, the Supreme Court has said that once a policy has been issued, an insurance company cannot deny a claim citing existing medical conditions that were disclosed in the proposal form. A two-judge bench said that once a policy has been issued after assessing the medical condition of the insured, the insurer cannot repudiate the claim. The bench, however, added that a proposer is duty-bound to disclose all material facts within his knowledge to the insurer. Kshitish Mahajan joining us on this. Kshitish, take us through really what this means, the implications for the sector, and whether or not there's expected to be any pushback on this.
So, first of all, thank you for inviting me. And I think it's a welcome step for those people who don't do this deliberately. Normally, what happens when you disclose, when you take an insurance, medical or let's say in life insurance, you end up disclosing everything because now everything is so transparent, and most of the people who are buying insurance, they very well know that they can just run away with not disclosing their existing ailments. But normally, in situations like the case which Supreme Court is referring to, which is Nanda case at San Francisco airport. So, in these type of cases, normally the intention of client is not to take a claim from insurer. Who want to get into a hospital and get for 3 or 4, stunts into his arteries? So nobody wants that. And you are not even knowing that is coming your way. And if you have gone through an insurance process, which is a medical test normally which they do, I think after 6-7 years of that insurance which you have taken, that's a welcome call which Supreme Court has taken, wherein they are saying that once you have issued a policy, you have done your due diligence and you have issued a policy, then you should take care of claims because no one is going to take that claim for no reason. There is a ailment, there is a need of claim, that's why they are taking. Now, that's from a client per se. It's a very, very welcome news because many times you're not buying these policies yourself. You're buying through a middleman. Many times you don't understand the overall formatting of policy. There are millions and zillions of reasons, but broadly the intention is not to not disclose. So this is what from the client per se. From the insurance side, business side, yes, it's a little pushback for most of the offerers in the market because that means this is a precedent which has been established by a Supreme Court.
Yeah.
All the insurance companies needs to follow that, and many clients will come up to now insurance companies that, boss, you have to look at our part of claim also, because I have seen myself with one of the relatives that where they are finding it difficult, irrespective of they have disclosed everything that what they have gone through, and still it's not been captured by the bank which were selling the insurance. So it's a little pushback for insurance sector. I totally agree with you, but I feel that it's a little wake up alarm for most of the insurance company. They'll robust their medical procedure must on a different way now. They will have better testing done for the client before offering them a policy. They will take them through more tests. That's my way of looking at it. And filtration will happen at the medical test level only, rather than just
Understood.
going 3-4 years down the line, and then you are getting into a fight with the client and whether you want to pay the claim or not. So I think the medical examination test will become more robust,
Sure.
and that needs to be changed from the insurance company side. But yes, it's a welcome step. If knowingly, unknowingly, if you are missing out, let's say if unknowingly you're missing out on some disease or ailment, then you should not suffer. Individuals should not suffer. It's a very good decision by Supreme Court, and Supreme Court has clearly mentioned that that's an individual or insure or the claimant responsibility to disclose everything which he is knowing, or anything, any ailment which is going. So that's what has been clearly mentioned by Supreme Court also. So I think it's a very
Right.
balanced decision which Supreme Court has taken. So
Wonderful.
ball is in now insuring companies court, and my sense is they will further enhance their medical claim, medical test system.
Kshitij, thanks so much for joining us and giving us a comprehensive analysis of that big move coming in the insurance space. The Omicron scare has gripped the Indian economy. In 2020, companies and organizations wrestled with crashing demand by trimming costs in all possible ways. In 2021, India's economic activity has marginally surpassed pre-pandemic levels, except in a few sectors like travel and hospitality. But overall, we can say that the Indian economy showed signs of recovery amid uncertainty in 2021. Whether this will sustain in 2022, that's the question. Firstly, while COVID dealt a heavy blow to the Indian economy in 2020, GDP contracted 7.3% that year. The ongoing fiscal has seen a prompt recovery. 2022 is likely to be the year when the Indian economy reveals its true growth trajectory. GDP is expected to claw back to pre-COVID levels, with reports suggesting that GDP is likely to maintain a 9% growth rate. While GDP is expected to recover, the same cannot be said about total employment in the country. The pandemic has deepened the crisis of employment and incomes for the poor in India. Number of employed people as of August 2021 is lower than the August 2019 level. A stagnant employment situation will impact India's growth story. Tackling this crisis should be a priority for policymakers in 2022. Not only job and income losses, but dwindling consumer purchasing power can also hinder India's growth. While private final consumption expenditure rose this fiscal to 37 lakh crore rupees, it was still lower when compared to 2019 levels. With the threat of a third wave looming large and people wanting to hold back for a rainy day, household consumption could take a further beating. Let's assess the likely impact of Omicron on India's recovery. Will a third wave derail India's growth? We had a word with Dr. Sunil Sinha, Director and Principal Economist at India Ratings. Listen in. As we see curves beginning to be reintroduced, there's obviously a lot of question on the kind of impact this could potentially have on the economy, given that we were just about starting to see that momentum pick up and had fairly high expectations on GDP. Do you feel that some of those projections will be revised, curtailed, considering the uncertainty around the next few months?
The Omicron variant certainly has raised the uncertainty, but as of now, the impact of Omicron is still, very confined. Although, say for example, the yellow alert has been declared in case of Delhi and in several other parts of the country. there may be similar announcements in the coming days and week. But as of now, we are still holding on to our GDP forecast of 9.4% for the current fiscal year, simply because the kind of uptick that we had been expecting post COVID 2.0 turned out to be better than our expectation. Somewhat, even if Omicron and related issues say impact the economy, some of it has already been taken care of by the higher than expectation growth in the month starting say July till about November, December. So we are still hopeful that economy will clock 9.4% GDP growth in the current fiscal.
Okay, so that's interesting because that's a little on the higher side and you're still sounding very confident, Dr. Sinha. Just take us through whether you see an equitable distribution of the bounce back. Which sectors do you feel will still find it hard or struggle to come back? We have seen already, some outperform during this time, while plenty of pockets, for example, on services, for instance, have taken a while to come back. What's your sense going forward?
You are absolutely right. The sectors where human contact becomes inevitable, or the way we call them contact sectors, that are largely in the domain of the services. And these are the sectors which had been badly hit both in 1.0 and 2.0 COVID, and likely to be badly impacted if Omicron, which I would call 3.0, really plays out. And in fact, when we look at some of these sectors, the hotel, tourism, restaurant, I mean, they were, still fully not recovered, and they were just kind of bouncing back. And now we have the new restrictions coming in, so they will continue to get impacted. However, the non-contact sectors have, to a large extent, learned to live with COVID and COVID-related, restrictions. So, for example, manufacturing and even agriculture to a large extent, particularly the way the harvest has panned out after October, November, suddenly gives us the confidence that these are the sectors which are or would be doing better than what our expectation was initially. But certainly, the tourism, hotel, aviation sector, they may get impacted once again. So some bit of positives, some bit of negatives, and net, I still believe that we may still land with 9.4% GDP growth in fiscal year 22.
Here's what else is making news in the corporate world tonight. Ola is setting up hyperchargers at several BPCL petrol pumps as well as residential complexes across cities to charge electric vehicles. According to the company's CEO, Bhavish Agarwal, more than 4,000 such points will come up through next year. Amaraja Batteries will invest 10 million euros in a European manufacturer of premium innovative batteries. The investment in Bajaj Auto gives Amaraja a foothold in the European EV ecosystem, where multiple battery gigafactories are being set up. WhatsApp will be adding a communities feature to make it easier for people to coordinate with each other. The feature allows admins to link up to 10 WhatsApp groups and put them under a larger community group. It's the first clear sign that Reliance Industries is preparing a succession plan after Chairman Mukesh Ambani. In a speech on the occasion of company founder Dhirubhai Ambani's birth anniversary, Mukesh Ambani said India's largest firm, Reliance, is in the process of effecting a momentous leadership transition, from seniors belonging to his generation to the next generation of young leaders. Ambani, the 64-year-old elder son of the late founder of the group, added that he wanted the process accelerated and that all seniors, including himself, should yield to the highly competent, highly committed and incredibly promising young talent in the company. He said it was the responsibility of seniors to guide, enable, encourage and empower the new generation. Mukesh Ambani has named his children Akash, Isha and Anant as the next-gen leaders who will lead Reliance to greater heights. seeing in them the same spark and potential that Dhirubhai had for making a difference to millions of lives and contributing to India's growth. Bajaj Auto has taken the big plunge into the business of electric vehicles. The company has announced an investment of 300 crore rupees and started work on a new factory at Akuri, which will manufacture EVs. The unit will have a production capacity of 5 lakh EVs per year. Incidentally, the factory is on the site of the original Chetak scooter factory that made Bajaj Auto a household name in India. The factory will employ nearly 800 people and will be highly automated. Bajaj has been a late starter in the EV space and trails behind new entrants like Ola and Ather. In a setback to Tamil Nadu's image as industrial manufacturing powerhouse, a factory producing iPhones near Chennai has been put on probation by Apple. The factory has been an epicenter of protests after more than 250 employees fell ill due to food poisoning.
These were the scenes earlier this month outside the Foxconn plant in Sri Perumbudur, which manufactures iPhones for Apple in India. Huge crowds blocked highways and many of the protesters were detained. The employees were enraged after rumors spread that 2 of their colleagues had died due to food poisoning. More than 250 employees had to be hospitalized. 10 days later, things are still uneasy at the Special Economic Zone where the Foxconn plant is located. Police is present everywhere and the plant, which employs 17,000 people, has not reopened since it was shut on 18th of December. Early Wednesday, Apple issued a statement putting the factory on probation. Apple said it had dispatched independent auditors to assess conditions at the dormitories. This after it had found some of the accommodations and dining rooms being used for employees did not meet its requirements. While Apple did not specify what is meant by probation, it had taken similar action against its other supplier, Wistron, last year. Apple did not award Wistron any new business till its factory issues were resolved. Foxconn also announced that it was restructuring its local management and was taking all immediate steps to improve facilities. It added that it will keep paying its employees during the downtime. Foxconn is one of the 2 Apple suppliers which manufacture the iPhone in India, the other being Wistron. The 2 make iPhone 11 and 12 in India and had been experimenting with manufacturing the iPhone 13 model as well. Experts say the impact on the availability of iPhone due to this disruption will be minimal. Bureau Report, Business Today Television.
The real estate behemoth Kanakya Group has decided to re-enter the multiplex business. After the 2012 deal to sell out Cinemax to PVR, Rashesh Kanakya, a well-known face in India's real estate sector, now plans to have 75 screens in FY23. Cinemax earlier had 138 screens spread across Western India. The deal between Cinemax and PVR had a non-compete clause for a period of 10 years. They also had a lease agreement for 23 screens. That period is set to conclude over the next few months, and Kanakya is all set to get back to the business. I caught up with Rashesh Kanakya earlier in the day and discussed how the possible beginning of a third wave could affect his big screen plans. Listen in to this short excerpt.
You're looking at re-entering what today seems to be a business that is the hardest hit post-COVID. What has led you to this decision?
So one thing, we have always been a pioneer in this industry. Yeah, we have always learned the hard way in this industry. So when we came, there was not a single brands available in exhibition space. So we started, we exited, and now after 10 years of our exit, the time is such that it's a totally disruption currently hai. Or in that disruption, we felt that this is the right opportunity. If we want to come back in the business, we can come in. And that's how we planned out. We checked on our market, we did a little research, and then we decided that if we want to enter back in this business, this is the right time.
So does that mean that you're looking at it from an opportunity in terms of certain regions, or the fact that perhaps real estate right now might be more reasonable in order to kind of strike up partnerships that are going to be viable at a time like this? What do you feel is going to be your advantage?
Yeah, one thing, we had given our 23 screen, which was owned by Cineline India Limited, that was given on lease to PVR. And that 10 years of that lease is getting over by March 22. And we thought that let us take our own screen back and let us acquire pan India properties on lease, where the fit out has not been started by the operator.
But the bigger question, Rashesh, is: do you see people returning to cinema halls? And I'll give you a sense of what we've been hearing from the industry. In the last few months, we saw a lot of new launches. We saw, a lot of talk by some of the leading players that people do want that experience, and it'll continue to be a robust business. But do you see any kind of concerns, given that we're again heading into a period where malls are still relatively open but might be shut soon, but cinemas are now shut, and again we're entering a period of lockdown which will be fairly devastating business-wise?
I feel that it's very unfortunate for the multiplex industry that they are the first one to get blocked, and there are so many people outside at many other places, name it election rally, or name it bazaar, or name it a wedding, and this is all in cinema hall. People are sitting very far away, but still it's unfortunate that industry suffers a lot.
That's all we have time for on the show today. Thanks so much for watching.